Well, ESG, I put it in two different forms. So there's ESG and there's impact. ESG effectively is doing the thing right. It's within the internal behest of management, within their control. And it's the environmental, the social, the employment characteristics and the governance. Whereas impact is the effect of the firm on wider communities, wider economies. And so ESG is different to impact, and we do both. We do both doing the thing right and doing the right thing. So both ESG and impact. Originally, the idea for the fund, you've got to go back 29 years. You've got to go back to when I was young, fresh-faced, clean-shaven as a young analyst. The first entity that I analysed as a young analyst was Peabody Trust Housing Association. So that's social housing, the legacy of a Victorian philanthropist called George Peabody. And that's still delivering impact in terms of for the benefit of the London poor to this day. And that leaves you with an impression 29 years ago that actually this hard-nosed investment world I'd entered into could do good for society. And it was that came out in that first meeting with Big Issue some 7 years ago. It was those kind of elements of the bond market that I knew that we could deliver over and above the financial, and that kind of experience that's come to bear. The UK Social Bond Fund is just a corporate bond fund, but it specifically targets investments that also do good for society. And so each and every one of our investments must hit at least one of the 8 areas of social outcome that are delivering through the use of proceeds for society. There are 3 stages that we tend to look at, but first and foremost has to be the financials. Because if you think about it, in extremis, if a company goes bust, it will neither deliver the financial return nor will it deliver the impact. So that has to be the first criteria. And only when it's past that stage do we get on to the next stage, which is looking at the ESG factors with a particular emphasis on controversies. So we're looking at the internal management, the things that management are in control of, and particularly under pressure when there have been controversies. It's not necessarily the incidence of controversy, it's management's reaction to those controversies. Are they doing things to mitigate, to make sure it doesn't happen again? And that gives us a window into the culture of management. And that gives us an idea of how they will react in the future. And if it passes that second ESG stage, then and only then do we start doing the real heavy lifting of impact assessment, which we then do on a bond by bond basis, not just the company level, but the individual bonds themselves. So we will differentiate between a green bond and a general corporate purposes bond issued by the same company when we reach that third stage of bottom-up fundamental impact assessment. Big Issue came in to see Columbia Threadneedle because of our financial acumen. We're well known for delivering on the financial side, but of course what they wanted was to direct people towards an investment product that shared their values, i.e. that did good for society as well as delivering the financial return. And that was some 7 years ago. Big Issue are our social partner, and so they really touch the process in 3 distinct ways, which holds me to task on delivering the promises that we make on the social side. And so they define what is social, 8 areas of social outcome. They sit on a social advisory committee which quarterly holds me to task as an oversight committee on delivering on the social promises. And finally, they write an independent report on the impact of the fund, an impact report. When we launched the fund, effectively most of the focus on ESG was on the environmental, the E. What we do is we move from the E to the S, but we don't forget the environmental. Things have changed, particularly recently, in that there is a shift in focus from environmental to social, particularly during the problems that we have of coronavirus. But we, all those years ago, were really first to focus on those social aspects. Since we launched, there has been an uptick in the volume of these types of issues, the sorts of things that are going to do good for society, and particularly recently. In fact, this year, we've had more issuance of social bonds than we've had in the entire period that preceded it. That's the kind of response that we've seen from the markets. Bonds are particularly suited to impact because you can follow the money through to the use of proceeds. And that's the important thing, particularly with a primary issue. That's where an issuer of a bond borrows the money, spends that money in society, and then you can analyse the good that that does for society, for economies, for the locality in which it's spent. The aim of the fund was to give you the return you should expect for the risk that you're taking, and over and above that, to try and optimise the good that it did for society, social alpha. And we've managed over the period since the fund's launched to deliver not only the financial return for the risk that you're taking, but indeed we've managed to pay you back for the cost of active management. We've also optimised the social intensity to the effect that we measure this in terms of high, medium and low social outcomes, and we've got the least number of low social outcomes, the most number of medium and high that we've had in the entire period. All markets have been affected by COVID-19. Indeed, economies, societies have been affected tremendously by COVID-19. One of the things that I've been really pleased to see is the response of the bond market, which has responded very quickly and in size to that particular problem by issuance of COVID response bonds, social bonds, sustainability bonds, aiming to address the problems that have been caused. And the way that we've adapted is actually just coming into its own. We haven't adapted the 8 areas of social outcome that we're looking for. We haven't adapted the style, but it's very much coming into fashion, I suppose, in terms of moving from the E to the S, responding to what is a societal problem. One of the things that I wanted to do was encourage the issuance of the types of bonds that would do good for society, to grow the market for social bonds. And I've been really pleased with several instances whereby we have encouraged those kinds of issues to market. So really pleased by that, really pleased by encouraging the types of issues that we can buy that will do good for society.